Hi everyone, it's Ryan with SacramentoAppraisalBlog.com, and I want to talk about 10 things to tell your clients about the housing market in Sacramento. Okay, and this will be about 5 minutes or so. I hope it'll be worth your time. If you like it, give it a thumbs up. But number one, the market had a normal fall and is now beginning to heat up. Okay, here's the median price since 2013, and we see a very seasonal element here where values in the spring heat up and the market cools in the summer, and then we see a lull in the fall. And so we see this dynamic every year: heat up, level off, lull, heat up, level off, lull, and so on. And so right now in early 2017, we've seen the median price increase by 6% so far. And so it's easy to look at just these months and go, wow, values are on fire, and this is such a big increase, but we really see that about every single year, because what happens in a market in the early part of the year is values often return to where they were during the summer. And so we see the average sales price in green is about where it was at the height of summer, just a little bit lower. Here's the median price in blue. Values are about where they were in at the height of summer. And same thing with average price per square foot. Now, this translates well, even though it's county data, to many neighborhoods. And so when you pull up comps, you see that very similar sales, they don't compare to the properties that closed in, maybe November, December, January, but current sales and pendings, you maybe look back in the summer and go, oh, prices look fairly similar to those times. Now, in some neighborhoods, maybe values are up a little bit more. In some neighborhoods, maybe values are very flat, okay? Two, monthly inventory is still very low and about 14% lower than it was the same time last year. Okay, we can see over the past few years, there has been a trend of declining inventory. Now, from 2012 to 2013, there was about a 1 month supply of houses for sale, and it was one of the most aggressive markets we've seen in Sacramento. That was because investment funds were gutting the market, interest rates were below 4% for the first time. There was a lot going on. Okay, so now we're at about a 1.5 month supply of houses for sale. Still feels aggressive, but I think we have to remember it's not like it was in 2013 still. Here was inventory from 2001 through 2017. Do you remember the dark days of real estate? There was over a 14-month supply of houses for sale in 2007. The market is so much different than it was 10 years ago, right? And here was that 1 month supply that I talked about over an entire year where we saw a very aggressive market. Okay, we're definitely trending down. If we get down to that level again, the market will only get more aggressive. All right. Three, inventory is not the same at every price level. Okay, here's inventory by price range, and we can see generally the higher the price, the more inventory there is. Okay, this is a very normal dynamic. And we think about half the sales are under 325,000 in Sacramento. And you can see that so half the buyers are buying right here. And so that's why the market feels very, very aggressive for many, because there's so few listings right now on the market at this price level. Four, it took an average of 44 days to sell a home last month in the entire county. You can see, generally speaking, the higher the price, the longer it takes to sell. So this year, five, it's taken an average of 2 less days to sell compared to last year. So here's February 2017 versus February 2016. So you can see that the market is a little bit more aggressive this year. Okay, and we start to see the values heat up, inventory, lessens, and you start to see that it take less time to sell in the spring. And so next month and beyond, we're going to expect to see that similar trend in the spring. Number six, sales volume in the region is slightly higher than last year, about 2.5% higher than it was last year. Okay, so there's definitely more sales happening, not an exponential amount, but hey, we'll take what we can get. Number seven, FHA volume in the region declined about 7% from last year. Okay, it's easy to look at a stat like this and think, wow, we have a real problem with first-time buyers getting in the market, getting offers accepted. But I think we have to remember there are actually more conventional products that can compete readily with FHA. So that's part of the issue. Okay, and on that note, eight, FHA sales in Sacramento County were 25% of all sales in Q4 2016. All right, so we might be tempted to say first-time buyers are struggling and buyers without a lot of money down are not getting offers accepted. But even last month, 25%, 1 in 4 of all sales in the entire county were FHA. Here's an even better stat. Almost 29% of all sales under 400,000 were FHA last month. Okay, so we have to let the stats speak to us instead of these ideas that first-time buyers are getting beat out of everything. Yes, it's difficult, but hey, people are getting into contract. Number 9, the market isn't doing the same thing in every neighborhood. Here's duplex sales in pocket, and you can see current values are about 10 to 15% lower easily than where they were at the peak in 2006. The market isn't doing the same thing. Here's a Caro Drive. You can see current prices are about 30% lower than they were at the peak. Fourplex sales. Here's a 2 to 4 unit sales in Midtown. You can see that values are really at or exceeding the peak around 2005. So it's just a good reminder that it's easy to generalize about real estate and say the market's hot and to think that the same level of hotness is happening in every neighborhood, but that's really not the case. It would be like saying the stock market is hot, that it's on fire, but that doesn't mean that stock for Snapchat and Apple and Samsung and PetSmart and Starbucks and all those companies are doing the exact same thing. Some might be much more aggressive than others. Some might be very cool or flat. Same exact trend in real estate. Maybe the lower end of the market is very aggressive, but the higher end is flat. Okay, different dynamics. Last but not least, number 10, the median price is 101% higher than it was at the bottom of the market. And if you notice, the median price in Sacramento in 2005 at the top, at the peak, is still about 17 to 18% higher than it is currently right now. So action step, I'd say find a way to use some of these numbers in conversation today. It gets really interesting and intriguing in real estate when we can have specific conversation about trends. I do have a blog. You're welcome to subscribe if you wish. If you like this video, give it a thumbs up. But otherwise, thank you so much for your time. Really appreciate it.